Good day to you. It's Clive Maund of clivemaund.com, and I think we are all agreed that it has been one hell of a week in the precious metal sector. And there's no better place to start this roundup of the charts than with the long-term 45-year chart for silver. But first of all, I'd like to thank all new subscribers and subscribers to my YouTube channel, which are much appreciated. And what we're going to do in this update is to look at a series of before and after charts showing the many recommendations on the site that have worked out very well indeed over largely the past 3 to 6 months or so. So what we're going to do is we're going to set the tone, or rather get the background, the perspective, by looking at our increasingly famous chart of the ages, the 45-year chart for silver. Now, we're looking at the version of the chart that was actually posted on clivemaund.com back in September, before silver actually broke out of its enormous cup and handle holding pattern that had been forming since 1980. And we're starting by looking at this chart from September, which was pre-breakout. Now, if we move on now to look at it, the latest 45-year chart, we see that it's broken well clear of this pattern. And the main point to make here, which is the biggest background factor of all as far as silver investments are concerned, and indeed the precious metal sector as a whole, is that you do not have a breakout from a 45-year pattern that leads to, say, a 6-month advance and then it's all over. In other words, this is probably the start of a multi-year advance that is going to take silver much higher, and probably, of course, gold and the other metals and the precious metal sector and resource stocks in general. So we can see on this updated version of this 45-year chart that it's now well clear of this pattern, which means that, if you like, the gravitational pull of this cup and handle that was maybe holding it in check has now dissipated, which is why silver's been rising so strongly in the recent past. Now, moving on from this, I want to show you a chart that was posted on clivemaund.com around just before Christmas. It was in late in 2024, highlighting a very favourable buy spot for the sector. Now, I just want to point out here that I'm going to go through these charts quite quickly. So if you want to review them, just pause it or rewind it or whatever. That's the idea, so that I don't ramble on for ages. If you want to just pause it and look at these charts in detail, of course, that's the whole idea of annotating these charts beforehand. Now you can see that we had an excellent buy spot for the sector at the end of 2024, which was highlighted on the site. And this is what happened to it in the following chart. You can see the buy spot there at the end of 2024, which was near perfect. And it's taken off, and this is a classic bull market. Now, one thing that's worth pointing out on this what's a 2-year chart now for GDX is that with the latest rise, it's brought it to the top of that channel. And you can see on the MACD indicator at the bottom of this chart that it's extremely overbought, record overbought by a country mile, or a very large margin. That means that there's a fair probability in normal technical analysis we would expect a correction here or a consolidation. Now, I know this is a melt-up, so anything could happen. But it might be prudent here to book some profits on things that have become insanely overbought in the last few weeks. You can always, keep some powder dry and be ready to rotate into some stocks that haven't yet moved, and there are some. So I would just say, looking at this chart, it might not be a bad idea to book some profits here and just have some powder dry going forward, so you can redeploy into other more promising stocks. Now we're going to start looking at the specific stocks, the specific recommendations mainly over the past 6 months or so, to see what happened to them. We start with this one here called Blue Lagoon Resources, where we see that we did a profitable trade in it last year between March and June, and then we bought it back in on the 3rd of October, and we can now see what happened to it afterwards. It's done well. It didn't really get moving for a couple of months. But then it took off in December, early this month, and and it's doing well, and it looks now like it's making a bull flag, and which will the volume pattern suggests that it's going to break higher and go shooting up again. So we'll have to see with that one, but it's doing well anyway. On we go now to the to what was a great recommendation back in September when we bought this speculative play CleanTech Vanadium, and this stock we made 600% in a month, and then dumped it before it caved right before it caved in. So that was a very nice trade. You can see the entry and exit points there. And moving on again, this was a terrific. This is a terrific stock technically. It acts very well indeed. Guanajuato silver, and we've bought this and sold it at various points all the way up in this uptrend from the middle of last year. The latest point at which we bought it was early in November, and excellent buy spot at the bottom of that expanding channel. And this is what happened to it. As you can see, it's done very well indeed. And it's now looking. It might be worth taking some profits here and switching into something else because it's really extended here. It's extremely overbought. So it wouldn't do any harm to say book some profits here. And just sit on them for a bit, or maybe redeploy into other stocks that have yet to move. So that's worked out really well indeed. Now here's another one which displayed a fine head and shoulders bottom, and at the time it was recommended back in November. At that time, I didn't realise that it was making a head and shoulders bottom. I just saw that it was a good buy spot on its rising 200-day moving average, and especially picking up on that increase in volume there, which is why we bought it late November. And then by the time it reacted back in mid-December, the pattern was recognised as a developing head and shoulders bottom. So we bought it again in the right shoulder low, and this is what happened to it. It broke out the head and shoulders and took off higher. So really, nice pattern that, and we've done well with that. Now we come to Impact Silver. Now Impact Silver, in the middle of late last year, was seriously underperforming most silver stocks in the sector, and I figured that this had gotten overdone. So we went for it early in October. It turned out to be a little bit earlier because it drifted lower. But as you can see, the accumulation line looked awful, so we were sticking our neck out a bit with this one. But look what happened to it. Yeah, it went down a bit further, and it turned out that the correction, which we bought in a little too early, was what's called a 3-arc fan correction. And the rule is that once it breaks out of above the third fan line, and it's free to take off higher, which it did, and you can see it's arcing higher now, and it's about in the middle of that curved uptrend. Now this is a curved uptrend, of course, on an arithmetic chart. I haven't actually looked at it on a log chart. It could well be a parallel channel on a log chart, but anyway, it's looking good. It's been ascending on good volume. So that's Impact Silver. You can see it's done well since we bought it, despite dropping for a month or so. Moving on again, we come to a stock which was a gold stock, big gold stock, which was recommended at an excellent entry point, as it turns out, in July of last year, and it's done very well indeed. Have a look at this. It's which is for a large stock, that's not bad. It's about doubled almost since then. You can see how good that entry point. It was a classic entry point. It was in an uptrend. It had dropped back to the vicinity of its rising 200-day moving average, and it was basically a no-brainer. Right now, it's very overbought. Bear that in mind. So some of you might want to consider booking some profits in this. It could go high, given the insane conditions prevailing across the sector. But when things get as overbought as this is, you need to, have one eye on the exits. Moving on again, we come to Silver Mountain Resources, which made a very pretty little bowl pattern in the fall, in October, November, which I happened to spot, and picked up on that big upside volume as well, which drove the accumulation line higher, which made it a buy. So we bought it, and this is what happened to it. Broke out of a bowl, and then it proceeded to consolidate in a flag-like pattern for a while, soaking up overhanging supply, and then it broke higher again. And now it seems to be just on Friday, it broke higher again from our flag. And it broke higher on very big volume, which suggests to me that it's headed higher, still higher. And I don't think it would be unlikely for it to come down from here immediately. So I think it's going higher because of that heavy volume on that breakout. Silver Mountain Resources doing well. Now we move on to Silver One, where we did a profitable trade, albeit a little bit kind of chaotic looking or haphazard. Strictly speaking, it would have been ideal to sell it early and take profits early in September and return, in November. But it's easy to say these things with the benefit of hindsight. But we took profits in it at one point in December because it had risen to the top of a trend channel and it was overbought and so on. And it just seemed to make sense to take some profits there, which we did. And then I figured it would go up again. It looked like it was going to go up again. So we bought it and it did go up again immediately afterwards. It's made a decent little profit there. Not that great, but it's okay in a few weeks or a couple of weeks. Now, Soma Gold was an interesting case because they had a strike at their mine I think it's in Colombia or Peru or somewhere. I don't remember exactly now, but there was quite a long industrial dispute going on, and I figured that it would end at some point and that the stock would go up. Now, I don't know if it has ended or not, but it looked like a buy. We did a profitable trade in it early last year, as you can see. That's making a 73% gain in less than 2 months, which was good. And we bought it again late in September, and this is what happened to it. It fiddled around sideways for a month, 6 weeks or so, and then it took off higher again and broke out of that trading range, and it's on its way again. Although it did put in a couple of rather slightly bearish-looking candles late last week, so it might react back a bit from here. Moving on again, Sprott Physical Platinum and Palladium Trust was recommended early in December, congruent with an article, or a pair of articles, in fact, saying that both palladium and platinum were looking set to break higher, which they did. And we had a very interesting pattern there in Sprott Physical Platinum and Palladium Trust, where the price had reacted back across the channel in what looked like a pennant. It broke out of this pennant early in December, late November, I think, and then it formed a tiny, which you can just see on this chart, a tiny bull flag. And I figured that it was going higher. The volume pattern very bullish, and the accumulation and so on. And so this is what happened to it. It went roaring up, and it then made a flag towards the end of December, or rather a pennant actually. It made a pennant towards the end of December and early in January, and it broke out of it again a few days ago. The target for this move, assuming the sector holds up, is going to be at that green oval there. If it gets up there, it would be probably worth taking some money off the table, taking profits, because it'll probably want to consolidate or react back some. So if you see it get up there in the next few days or a week or so, I would pull some money off the table, or all of it if you feel like it. Can always be deployed elsewhere. Moving on again, we come to old Jim Sinclair, Mr. Gold's TRX Gold Corp, formerly Tanzanian Royalty, which everybody'd written off and they were moaning about how they'd lost money in it for years and so on. And Jim kept the faith in his operation in Tanzania, and sadly passed away. I think it was a year or two ago. But anyway, it looked to me last August like it was getting ready to break out of this large bowl pattern. And now let's look and see what happened. Well, it did. And it broke out of it, and we bought it at a very good price at about I think it's 30 cents, and it's now up at $1.14, and it's just arrived at a target that was delineated, an update on TRX on the site on the 14th of October in the 110, 120 area, where you might consider taking profits, or so there's resistance there. So that's performed very well indeed. And we now move on to what I've done here is I've deliberately included a loser to point out that I don't always get it right. Nobody does in this business unless they're either a liar or they've got a time machine, right? I don't have a time machine. I'm not a liar. I don't always get it right. What happened here is that I was expecting this stock after due consolidation as total metals corp. I was expecting it to go higher again because it looked like it had been consolidating. The general trend seemed to be up. But what happened is unknown to me. I did check back to see if there was any stock with a 4-month hold on it. Any share issues with a 4-month hold on them. And I didn't find anything. I didn't look too hard, I must admit, because I, had under time pressure looking at various stocks. And turns out there was a tranche of stock with a 4-month hold on it, which got lifted. And when that happened, of course, all the people who were at the top of the food chain who bought the share issue at a low price, they just rushed to take profits, and they caused it to break down. And even though it's broken down, we took a hit on this one. There's no doubt about it. It dropped from what, $1.10 or whatever it was, $1.05 I bought it at, and it dropped down to about 70, 65. So that was I felt like crawling under a rock or something for a few days. But anyway, um, even though it broke down, the interesting thing is the accumulation line actually broke higher, and after the initial plunge, it actually bounced back on much increased volume, which suggests that the underlying technical condition of the stock is not bad at all. But what I suggest for anybody holding this stock is if it rises up to that support, what former support level has become resistance, you will get automatic selling from the people who are trapped in that top area, like us. So I would suggest as it approaches $1, anyone holding, dump it, because even though eventually it's probably going to break above that resistance and head higher, that will probably hold it in restraint for a while, and may even force it back down for a bit. So tactically, it makes sense to switch out of it if it runs up towards the resistance there. If it does run up to that resistance, of course, we will be able to get out at a much reduced loss. It'll be a relatively trivial loss compared to what it is now. So, I don't always get it right, and sometimes they don't work out. So that's that one. Now we're going to look at some more. This is the stock here, Copaur Minerals, which we bought on Friday afternoon. This is an interesting case because this was actually brought to my attention by a subscriber, and I looked at the charts and I thought, yes, this looks excellent. So I hastily prepared an article and posted it. I think it was about midday on Friday, and it was very nice to see subscribers, cliveborn.com subscribers, having confidence and belief and stepping up to the plate. And they stepped up to the plate in the afternoon and they bought it. And you can see what happened. You can see that buying in the afternoon after the article was posted. And this puts it more in perspective because you can see that we bought it there, or the article was posted when the price was at 13 cents. And it just took off out of that, thanks to our buying. And it was, I think, on the US market, I think it was all-time record volume. Nice, and this is looking good. I wouldn't chase it though. If you didn't buy it on Friday, just leave it. If it dips back, you perhaps buy it. But overall, it's an excellent looking chart. It's going to go much higher. So if you see any short-term weakness, this one to buy. Now, what we're going to do to end with is we're going to look at a platinum, a recommendation to buy platinum because it was early in 2024, April 2024, an article was posted on the site looking at platinum, pointing out it was horribly undervalued relative to gold and silver, which were taking off higher in a big way. So I identified at that time a head and shoulders bottom forming in platinum, and it was monstrously undervalued compared to gold and silver. I posted a relative chart as well. And I said, this is going up. And look what happened. It went berserk. But having said that, that recommendation was posted in spring of 24, and it still took it months and months. It took it till early 2025 to get its act together and get moving. But when it did, it really did. It really played catch up. It's looking very good indeed, and obviously somewhat overbought now, to say the least. Now, lastly, and to wind things up, we're going to take a look once again at the silver chart of the ages. The reason being that I really want to emphasize, especially for those people who think that this bull market might be getting long in the tooth, or there's going to be a heavy correction or something. Yes, it could correct because it's wildly overbought, obviously. The point of looking at this chart, the point I want to make looking at this chart, which I keep emphasizing, is that you do not have a breakout from a massive 45-year holding pattern that leads to a bull market lasting, say, only 3 months or 6 months. Silver's going much higher, and it's going higher probably for years, I would say, because this pattern took 45 years to build out. That's most of my life, and probably most of yours too. So this thing it's not coming down. The worst it's going to do, you'll get some, consolidation patterns. You might get the occasional violent shakeout. If you see it come down hard, if you see silver drop hard, you can jump in there and buy it, because it's going much higher. And it was, you might get scares and shakeouts because it's so short-term overbought, but they're just buying opportunities. And that's the note I want to end on. So I hope you enjoyed this, and it's become clear to you, looking at this update, that we're not here to mess around. We're here to make serious money. And if you want to make serious money, come over to clydemorn.com, subscribe. I think most of you can afford $75 for a month, and maybe push the boat out and pay $150 for 3 months. Imagine if you do a trade, you buy $1,000 of a stock, and it goes up 30%. What do you pay for your subscription? What's stopping you putting your best foot forward? There you go. So anyway, good trading. Have a great week, and it promises to be exciting next week. With that big rise in silver price on Friday, it might react early next week or consolidate. Well, we will take that in our stride. Anyway, enjoy the rest of your weekend and the start of next week, and speak to you soon. That's all for now. Goodbye.